Which 5 regulatory changes impacted cryptocurrencies the most in 2022? Welcome to CryptoLink channel. If you love getting news and updates about cryptocurrency, join our community by subscribing to our channel. You can tap the bell icon to never miss our new videos. If you enjoy our channel, kindly like and share it with your friends. December 25, 2022. Cointelegraph tweeted, "Regulations in crypto are developing, and this article breaks down all the important events you need to know about." Click the link to read more. 2022 will undoubtedly be known as a year of cryptocurrency instability, one in which the value of Bitcoin fell 3 times, some important businesses failed, and the sector saw a number of huge layoffs. Nevertheless, it was an important year for cryptocurrency regulation internationally. Although certain legislative changes are concerning because they take a tougher approach on digital assets, their long-term effects could aid in the industry's development. One's hope for the future can be increased by considering the key regulatory events of 2022. A similar program to limit proof-of-work or POW mining was unsuccessful in the European Union, although it was supported in New York. Cryptocurrency is clearly gaining ground in several countries, like Brazil and Russia. In fact, there were a lot more sites to keep in mind, but Cointelegraph made an effort to select those that best captured regional patterns at a larger scale. Cryptocurrency Assets Bills Market. The European markets in cryptocurrency assets bill must be ranked first since it has cleared all voting phases in the European Parliament and is expected to become a law in 2024. The thorough cryptocurrency framework has been under consideration at various phases of discussion since the European Commission originally put up its proposal in September 2020. Some in the sector, like Changpeng Zhao, the CEO of Binance, anticipate it to become an international regulatory standard. The European Securities and Markets Authority is recognized as the accountable authority under the bill's transparent licensing system. Stablecoin operators are required to meet strict criteria, and cryptocurrency influencers are subject to more legal liability. Positively, a planned modification to the bill that would have essentially prohibited POW mining as well as the absurd €200 million or $212 million daily stablecoin activity cap did not get it into the final draft. The proposed legislation takes a balanced stance and places a reasonable focus on investor protection. Warren Marshall versus Lummis Gillibrand. In contrast to the European Union, the United States has just recently begun its journey toward comprehensive law. There are many competitors, which is wonderful news. In June, the contest was launched by a joint draft from Senators Cynthia Lummis and Kirsten Gillibrand. An authority split between the federal bodies is included in the much-awaited Responsible Financial Innovation Act or RFIA. Investment contracts that meet the RFIA's definition of ancillary assets would be governed by the Commodity Futures Trading Commission under the bill. Additionally, it describes decentralized autonomous organizations, defines taxes of cryptocurrency mining and staking, and launches a research on the hotly debated subject of retirement investment in digital assets. Stablecoins are covered by a number of legislation. The Federal Deposit Insurance Corporation would support stablecoins similarly to fiat deposits under the first proposal, put out by Representative Josh Gottheimer of New Jersey. The second was announced in September and intends to outlaw algorithmic stablecoins for a period of 2 years. The Digital Asset Anti-Money Laundering Act, presented by Senators Roger Marshall and Elizabeth Warren in December, is the opposite of the Lummis-Gillibrand bill. As well as regulating crypto ATMs, it would forbid financial institutions from utilizing digital asset mixers. All transactions worth more than $10,000 would need to be reported by unhosted wallets, cryptocurrency miners, and validators. Senator Warren has pledged to draft comprehensive crypto regulatory legislation that supports the role of regulation by the U.S. Securities and Exchange Commission. The position of Russia on cryptocurrency changes. Russia, one of the biggest markets for cryptocurrency mining, has left a bad impression on the world this year. It joined the group of nations that view cryptocurrency as a means to lessen their alienation from the world's financial system after becoming the state with the highest sanctions in the world. The central bank and the finance ministry's contrasting stances on crypto regulation dominated the national debate before the invasion of Ukraine on February 24. The finance ministry has adopted a more moderate stance, while the central bank has strongly opposed attempts to legalize cryptocurrency. When the central bank granted the first license for a digital asset in the spring, the equilibrium was changed. Top authorities openly hinted at the possibility of using Bitcoin as a medium of exchange, while the Deputy Minister of Energy suggested allowing cryptocurrency mining. Since then, at least 3 legislation have been discussed in the Russian State Duma. Both bills would include cryptocurrency into the federal tax code, while one would experimentally allow mining. The third had already received the president's signature and forbade the use of digital currency for domestic payments. United States and Canadian prohibitions on cryptocurrency mining. The New York and Canada's province of Manitoba saw some of this year's most unsettling regulatory changes. Both locations, known for having ideal natural conditions for cryptocurrency mining, have chosen to put bans on those activities. The proof-of-stake or POS consensus mechanism, which uses less energy, has been touted as a more environmentally friendly alternative, although this option has been on the table from the beginning of the worldwide conversation about the negative environmental effects of proof-of-work cryptocurrency mining. Furthermore, the New York moratorium somehow doesn't directly forbid POW mining, rather, it only limited the ability to operate to the use of 100% renewable energy sources. As cryptocurrency miners and supporters prepare their cases to sway the public, it once more connects the subject to the clean energy debate. The big conflict between supporters of POW and POS is far from over, despite the fact that just 2 little regions have started the moratoriums. Brazil now accepts crypto as a form of payment. The Brazilian Chamber of Representatives enacted legislation at the end of November establishing a legal framework for the domestic use of cryptocurrencies as a form of payment. Despite not making cryptocurrency legal cash like El Salvador did, the measure is nevertheless important because it lays the groundwork for a thorough regulated system. The news may seem little in comparison to the big stories regarding regulation in the US or Europe. Nevertheless, it illustrates a persistent pattern of crypto-friendly actions in Latin America. While Washington and Brussels have been busy implementing their careful approaches to virtual assets over the last several years, Asian jurisdictions have been delivering restrictive signals. Latin American nations have demonstrated aggressive steps toward adoption. The countries of Paraguay, El Salvador, Honduras, and Argentina have all begun to accept cryptocurrency as payment for taxes and other expenses. El Salvador remains an advocate for Bitcoin. That's it for our today's video. So, what can you say about the news? Let us know about it in the comments section down below. Thanks for tuning in to CryptoLink. We are always excited to provide you with news and updates about cryptocurrency, and if you like this video, please click the like button. See you on the next one.